So class, welcome back again, and we were discussing about the initial recognition, and in initial recognition we were discussing that what particular cost should be included in the component of the cost. See, when you pass the double entry asset debit and cash credit, asset debit and cash credit, so the amount of that particular asset would be the combination of all the cost, would become the combination of all the cost accumulated as it was laid down in IAS 16. And what is the component of cost? What cost accumulated and becomes a part of the asset's value? Excuse me, class. So we were discussing about the general rule. All costs directly attributable to bringing the asset to the location and the condition for it necessary to be capable of operating in the manner intended by management to bring the assets to intended use or readiness. I've explained in detail in the previous part of the section. Now, what would be the example? See, this is not the hardcore example. This is not the exhaustive list. This is the list just for your understanding. The examiner can give you any kind of cost. You need to make sure that it falls under the category of directly attributable or not. You should have the fundamental definition of this particular inclusion of the cost. This is not the exhaustive list. This is just for your understanding. So remember to keep in mind the fundamental definition of this particular inclusion of the cost, and that is directly attributable, is specific cost. So number one is purchase price. For example, if I purchase any property, if I import any property, so the price that is being paid from my pocket to the vendor would be the purchase price and less any discount. If he has given me any trade discount or any kind of the relationship discounts, so that would be deducted from the purchase price and it would come as a purchase price. So the trade price, actually the initial gross amount would be called the trade invoice or the trade price, in which the trade discount would be deducted and the final price would be called a purchase price, the PP. So the gross amount would be called a trade price and the trade discount would be deducted, in which the discount is being referred here in the slide, and the discount would be deducted and the final answer would be the net price. So that net price is the price that is being finally paid from your pocket to the vendor pocket, and that would become a first part of the component of cost. Number two is the import duty. When your asset is arrived at the port, so definitely you will have to pay an official duty, or it is called a custom duty or the import duty or some kind of a non-refundable taxes to the government, to any kind of a country's government, in order to clear your asset from the port. So you have to pay some of the import duty and non-refundable taxes. So the purchase price that you have paid your vendor will be added in the import duty, and these two combined would finally be the final cost of the asset. So the import duty must be added along with any non-refundable tax. Please pay attention. Number third is, if you, for example, pay any transportation cost to bring your asset from port to factory, and any kind of a transportation cost would also become a part of the component of cost. And any insurance, and any limited insurance, also known as a transit insurance, which you have taken an insurance from a company to insure that particular machinery or plant or any kind of equipment during the transit in case of any loss. So that particular insurance in a limited way will also become a part and parcel of the game. It will also become a part of the components of cost. Number fourth is the installation cost. Sometimes the installation make it necessary for the company to hire any professional engineers to install that particular asset, because the asset, when you have imported, is in a non-assembling phase, and the installation takes into the effect that all the units must be assembled into one, and there are certain installation is necessary for, or the certain configuration is necessary by the hired professional engineers to make the assets workable. So that particular installation cost is also become a part and parcel of the game, because you see, why would you hire an engineer if the asset would not be there? So you have hired an engineer because the asset is there. So that is directly attributable. That is the specific cost. Will you incur the transportation cost if the asset would not be there? For sure it's not. For sure it's not. So definitely you have incurred a transportation cost because the asset is there. So see, directly attributable. See, specific cost. Number 5 is the cost of site preparation. Sometimes the expenses has been incurred to the preparation of the site or the fencing. So you have to prepare the site for the proper installation of the cost, or for example installation of the fencing kind of. So that particular cost has not been incurred if the asset would not be there. So that particular cost would also add up the final components, would add up the final the cost of the asset. Another main important cost is, I'm skipping testing charges for a reason, but I will cover later on in this slide. The next is the professional fee. I'm also skipping dismantling cost for a reason. Professional fee. Sometimes you need to hire a professional. You need to hire a professional or a supervisor in order to, for example, guide you. For example, in order to have a survey. For example, in order to supervise each and everything that has been, to making sure that everything has been intended as properly or not. So the professional fee also included the technical service fee, or the legal fee, or the kind of a setup fee. So that also would be incurred in order to make sure that the installation has been completed or up to the mark. And the insurance cost we have covered, that is a limited insurance that must be added to the cost of the asset. Now the dismantling cost. What is dismantling cost? I will definitely discuss the dismantling cost in detail in IAS 37, because this dismantling cost relates with the IAS 37. You need to make sure that you must keep this point in your register. The dismantling cost would be understood to you only if you understood the IAS 37 provision criteria well, because that dismantling cost and the unwinding discount and the criteria and the understanding of it and the various practical example pertaining to this concept would be greatly discussed in IAS 37. So I'm just letting you know what dismantling cost is. It is the cost that actually is the dismantling and the removing of the site and restoring the site into the original condition. Removing of the site and the restoring the site into the original condition. Sometimes for the asset to be installed, you have to modify the land. You have to create a base for that particular asset to be installed in that particular land. So the modification of the land and the creation of the base of the asset, or for example bringing the asset to its original condition as it was previously, had the asset been not installed. So that particular modification and the creation of the base is known as the dismantling cost. And as I've told you, we will later discuss in IAS 37 in detail. I think that this particular area must be boring to you, but believe me, you will miss me during the exam days. If you are focused, if you are paying attention, if you are paying attentively, keeping away all the distractions, you will miss me during the exam days. So please respect this time. Pay attention to my energy. I'm bringing those entire energy and enthusiasm just to make this concept as easy for you. So remember the dismantling cost. Now the testing charges. So definitely the company's purpose, for example, is to produce a pan from the acquired plant, for example. And for sure, on a very first attempt, the machine will, or the plant will not produce the pan as intended by the management. There would be a try. For example, if in first try, if the plant is not able to produce the pan like I intend to, I would definitely make it a second try. I would definitely make it a third try. I would make it a fourth try. And I would keep on trying until and unless that particular plant produce the pan as intended by me. So all this cost from the first attempt till the final attempt of the production of the goods as up to my mark would be included in the testing charges. All the cost would be included in the testing charges. Now there is some kind of the exception here, which I would later discuss on when we will be discussing the practical question. But you need to keep in mind that testing charges, if it is not intended until it is not produced the pen as per my intention and as per my requirement, as up to my mark, that all charges will fall under the category of testing charges and would fall under the will become the component of cost. Now there is a loophole here too, as the experts or the smart people in the world find the loophole here too and tries to do or commit the fraud in the financial statement or manipulation of the financial statement. They try to do it too. I am just we as an auditor and we as an accountant just need to make sure that no fraud takes place while recording the testing charges, because there is a lot of space here to manipulate or to fabricate the financial statement. So you be an auditor need to make sure that the testing charges when it is added to the cost of an asset is rightly stated and is rightly evident. Now we're getting to the next slide. So the IAS also tell us that what should not be included in the cost. We have discussed in the previous slide what should be included in the cost, and in the current slide we are discussing what should not be included in the cost. Again, this is not the exhaustive list. This is not the exhaustive list, and in all the costs you will realize that these costs is not directly attributable. Is not directly attributable. These are not the specific cost to that particular specific asset, and that is the only reason we are skipping that particular cost as part of the components of asset. We are skipping this. Why? Because it seems that it has no direct connection between the cost. For example, general administrative cost. If you have hired a particular, for example, ward boy, or for example, if you have hired a particular manager to supervise all the factory, definitely you will pay him a salary even if the machine is not there, even if the plant is not there. So irrespective of your acquisition of the machinery, you will definitely or you will pay the manager a salary otherwise too. So that particular manager's salary would not become a part and parcel of the game and would not become a component of the cost or would not add up to the cost of an asset. Because why it is the salary will be paid anyway, or it is the salary paid irrespective of your machine acquisition. Likewise, the repairs and the maintenance cost, it will be the subsequent expenditure. It will be the subsequent expenditure, and we will later discuss on when we will be discussing the subsequent expenditure. Interest cost will definitely not be a part of the components of the asset. If you have, for example, acquired a loan for the whole factory, so why you would include that particular loan's interest cost to the components of cost? For sure you will not include it because it has no specific or it has no direct connection with that particular asset. Cost of waste management, every waste that you will produce, for example, in a way of testing things, or in a way of, for example, disposing of the material that is being produced by the machine, and that the disposal cost will also not become a part and parcel of the game. Cost related to the future expansion, training cost, for example, if you are training your employee how to operate that particular machine, that training cost would be expensed out and would not be a part and parcel of the game. And the marketing cost, if you are, for example, producing a pen which has not been produced yet, or for example has been produced, and you are, for example, you are marketing the pen, so that particular marketing cost is prohibited from including in the components of cost. And the celebration cost, sometimes the company gives a party to its staff for the celebration of, for example, acquiring a machine, or for example for achieving a milestone, or for example for achieving a target. So that celebration cost is also prohibited under IAS 16 and prohibits the accountant to include that particular celebration cost into the components of the asset. So these are the general guidelines, what to be included, what should not be included, and these are covered under the initial recognition. Now class. Alright class, so some practice questions here, and brace yourself, as I often tell my students that this is the way to have the fewer panic attacks on the exam days. So the practice questions is here, and I will move forward towards a very important and a very basic concept of the component of cost, and I think that it is very rare and less likely that these kind of questions may appear in your F7 paper, but for the purpose of revision and for the purpose of clearing the concepts from the scratch and step by step, I am giving you this example from one of the publishing book. So we start this question reading, and then we will solve this questions. We will solve this question in an Excel. So always remember that the questions always starts with reading the requirement of the question. So first we will read the requirement of the question, and then we will read the question, and during the reading and careful planning of the question we will read the requirement again, and at the end of finalizing the requirement and reading the whole question we will read the requirement again. So there will be 2 to 3 to 4 times that you will be reading the requirement, as I have told you in my earlier session, just to have the sync between your understanding and your direction of the question and your planning along with the requirement and the demand of the examiner. So we start the question: an entity started construction and building for its own use. Sarji, for your own use, for your own use. Remember, for its own use. If it would be written here, that for the resale purpose, so there might be limitation on the application of IAS 16, and there might be the possibility that we may go to some another IAS for help. But for its own use, make it as clear that this particular construction of the building would fall under the category of IAS 16, as it is fulfilling the criteria of the PPE. And incur the following cost. So the purchase price of land is 2,50,000. All the data is denominated under the dollar, and the denomination has been given above the data. It has been desynced, but you need to see that this is the $000 has been written above the data. So the purchase price of the land is $2,50,000. The stamp duty is 5,000. Stamp duty is kind of a custom duty or the import duty or the legal duty. The legal fee is 10,000. You must have hired, this particular company must have hired a legal lawyer kind of or the professional lawyer or the corporate lawyer in order to oversee this project. This 10,000. The site preparation and the clearance is 18,000. The material is $1 lakh. Now this is not a raw material. This is a material pertaining to this construction or the site preparation or the material related to the building. This is not the raw material. If it would be a raw material, it would fall under the category of IAS 2. So I assume that you will not be treating it as a raw material, and this is the material like kind of the pertaining to this construction building. The labor has been deployed from 1st April to 1st July 2008 is amounting to $1,50,000. Architect fee is 20,000. Architect fee, you remember the professional fee, the architect fee is 20,000, and the general overhead is 30,000. So the requirement of the question, we have already discussed that this is demanding us to calculate the cost of the building that would be included in the tangible non-current assets addition. Again, this is the requirement and the demand of the examiner that we are supposed to calculate the cost of the building. And how we calculate the cost of the building? By accumulating all the components of the cost separately, individually, and keeping in the criteria in mind that the relevant cost would be included and the irrelevant costs should be excluded, and that would fulfill the demand of the question. The following information is also relevant. So the other information is the beauty of the ACC examiner, and through the other information I often tell my students the examiner tries to modify the original data. So what is the other information? Tells you all about the material costs were greater than anticipated. This is all the story. On investigation, it was found that the material costing $10 million. I would definitely annotate this whole question if my pen would be in sync, but I would not be able to annotate this, and I'm just reading it, and I hope that you are reading with me word by word. So I'm on investigation. It was found that the material costing $10 million had been spoiled and therefore wasted. This is the cost of the wastage, and we would not be including this as a part of the component of cost. And a further $15 million was incurred on material as a result of faulty design work. So any kind of, we have discussed any kind of cost of disposal management or the cost of waste or the cost of the faulty design would not be included in the component of cost, and that would all be excluded. Number 2 point, as a result of these problems, work on the building ceased for a fortnight during October 2007. This period is falling under the period of our starting of the work. We have started our work on 1st April 2007, and the work on the building ceased during October 2007. So it means that the period is falling between our fiscal year, and it is estimated that approximately $9 million of the labor cost related to this period. So technically we don't include any cost of the labor that has been idle and it cannot be allocated to the, for example, site construction. So we generally exclude all the cost for all the cost that has been incurred and that has been incurred, but there is no connection between the construction. Likewise here, the building was seized, but the cost has been incurred up to $9 million. So that cost, that the idle cost or the spare cost would not be included in the component of cost. The third part is, the relevant information is that the building was completed on 1st July 2008 and occupied on 1st September 2008. All right, so this information is irrelevant, and based on the information and based on the data, we are supposed to calculate the cost of the building. So I just navigate to my screen and I just try to open up the Excel file, and in front of you, I try my level best that you will be seeing both of my screen, Excel file and the question file, the question we have just discussed, and I will try my level best to solve this question using the Excel. We will later on will practice the worksheet and the tools of the ACCA examination software base too. But for now, I'm just for the purpose of simplicity, I'm solving this question on Excel. The first is the purchase price of the land. For sure, I'm using the shortcut just to quick up this question. Purchase price of the land. Definitely, we will take this into account, the purchase price of the land. Number two is stamp duty. For sure, we will take this stamp duty into the components of cost, as we did discuss. This is a part of the cost, and because it has direct relationship and the specific cost. Third is legal fee. We will take into account the legal fee, 10,000. Second is site preparation. We will definitely take this into the site preparation. These are some of the list that has been laid out in IAS 16 for the purpose of understanding. So any cost that is laid down in IAS 16 would definitely take into account the components of cost, until unless the information in the other information is given otherwise. So we are skipping material part because the material is linked with some other information. So we are skipping material in the labor part, and that should be your approach even in the exams too. The easiest part should be solved first, and the confused part and that particular part of the question which you are not clear should be deferred till the end of the question, so that initially you can develop the confidence. So architecture fee, definitely we will take the architect fee. Sorry about my spelling, I'm not focusing on the spelling, I'm just focusing on solving the question. And the architectural fee, we will take the 20,000. So this is the direct fee, and definitely we will take all this cost into the component of cost. For sure, we will not take into account the general overheads, because the general overheads would be incurred anyway, irrespective either you acquire this machine or not, or whether you start the construction of the building or not. So the general overheads will be applied anyway. So we will not take into account the general overheads. Now the two data point remains to be solved. Number one is material and number two is labor. So what to include in material and what to exclude in material. So we will again, the other information again related to the material cost. So material costs were greater than the anticipated on investigation. It was found that the combined $25 million has been spoiled, and for example, you can you can dedicate this cost to the cost of disposal. So the combined $25 million should be excluded out of $1 lakh. So we will do what? We will do only take into account the material cost 75,000, and we will exclude the $25,000. Why? Because that particular cost relates to the cost of disposal or cost of the faulty designs or the cost of human error. So IAS 16 strictly prohibits these kind of a cost to be included in the component of cost. So we, based on the information is given, we exclude the 25,000 material cost out of 1 lakh to arrive at the proper components of cost. As far as the labor is concerned, it has been clearly mentioned that the $9 million is allocated to that particular period in which the labor was idle, or for example, the work was ceased. So the seized period cost would not be included in the labor cost. So the labor cost combined, I think, is 1,50,000. So we will deduct this 9,000 amount of rupees from 1,50,000 in order to arrive at 141. So the labor cost is 141,000. Why we have deducted this 9 million or $9,000 from the 1,50,000? Because it is irrelevant, and as per IAS 16 we don't into account the seized period cost. So this is the final area, and for example, if we will apply the formula just for the simplicity and just for the purpose of solving this question, so the total cost would be the part of the component of cost is 5,19,000. And for example, if you would, for example, total the cost given by the question, so the total cost I think is the 5,83,000, and we have eliminated almost 64,000. 64,000 cost, the 30,000 general overheads, the 9,000 labor, and the 25,000 relating to the material. We have excluded 64,000 material cost as irrelevant, and we will pass the double entry, that is the asset debit by 5,19,000 and the cash or the liability credit by the amount of 5,19,000. Class, pay attention to me. Pay attention. We are now moving towards a more typical part of this area. Remember, if you ever encountered any particular challenge or the question or the problem in solving any financial reporting area, remember to recall what could be the double entry. If you would be able to master on the double entry of any particular area, or if you would be able to grip on a concept of setting up a T account, you would be able to solve the questions like this. This is the advice that has been given to me by my mentor, by my teacher, and it works very well even in the corporate life. So what would be the double entry? So double entry would be the asset debit by 5,19,000 and the cash credit by 5,19,000. See, if the junior accountant would be appointed to pass the entry, and if the junior accountant would pass the entry asset debit by, for example, 5,83,000 and the cash credited by 5,83,000, so it means that the junior accountant committed an error and overstated the asset by 64,000. So sir, what would be the impact? So the impact would be that the depreciation would ultimately be applied on this particular cost of an asset. Your depreciation would be overstated, and when your depreciation would be overstated, your profit would be understated. When your profit would be understated, the tax liability would be understated, and the government will be after you, because you have in a view of the government, you have evaded your tax by overstating the expenses and by lowering the profit, and thereby ultimately lowering the tax liability. So remember, just by miscalculating or just by erroneous errors of the human to include or to increase the component of the cost, you are not only increasing the component of the cost, or by, for example, the cost of the asset, you are increasing the ultimately depreciation, and the depreciation would mean the SPL or the expense account would be higher, resulting in the lowering of the profit, and ultimately it will distort all the ratios that will be laid ahead. So remember, the double entry, let's say the double entry should be passed by 5,19,000. So your entry would be asset debit, cash credit. I'm repeating, asset debit, cash credit. Repeat after me. Asset debit, cash credit, asset debit, cash credit, asset debit, cash credit by 5,19,000, by 5,19,000, by 5,19,000. So it seems a very basic concepts to you, but when we progress towards the most advanced questions, there are more than 50% chances that you commit the error in this particular double entry, which seems very basic to you at this level. So remember to have the basic grip on the basic concepts as strong as possible. So this is the practical questions that we did discuss. Now moving towards the next theoretical part, let me just duplicate the slideshow and the subsequent expenditure. Remember, we have discussed the subsequent measurement. Subsequent measurement, if you recall in the previous slide, the subsequent measurement allows you to open up the two models, the cost model and the revaluation model. But the subsequent expenditure is what? This refers to the cost incurred after the initial recognition of an asset. And these costs can be either classified capital expenditure or revenue expenditure. So let me clarify. So let me be very basic to you. You just need to pay attention, pay focus. I need a crystal clear focus from you. See, after initially recognition of the asset, After the initial recognition of an asset, as it was previously stated in previous slide, we have recorded our asset by the amount of 5,19,000. All right, we have recorded by the amount of 5,19,000. So definitely the depreciation would be charged on the 5,19,000. And the SLM formula or the RBM formula of the depreciation method would be applied. Every further calculation would be applied on 5,19,000. That should be clear to you. But after the initial recognition, for example, on 1st January 2001, I've acquired the machinery, which the combination of cost would be equal to 5,19,000. And on 1st January 2001, I recorded the double entry by 5,19,000 by passing the double entry asset debit cash credit 5,19,000. Now what would happen on the 2nd January? What would happen on 3rd January? What would happen on 4th January? What would happen during the day till the fiscal year? Definitely this particular machine would be requiring some expenses. This particular machine would be requiring some maintenance. This particular machine would be requiring some capital expenditure, would be requiring some machine, so would be requiring some expense. I take a very simple example. For example, if you install an AC, an air conditioner in your room on 1st January 2001, and your cost to install the asset combinedly accumulated equals to 5,19,000. So in a year, your AC, your air conditioner demands some expenditure, some attention, like I am asking your attention. Your AC is also asking some attention from you. Invest in me, repair me, maintain me. Your AC would be conversing with you. So definitely you will call an AC technician, and your AC technician would incur some of the cost. And that cost would be classified into two categories. These are the subsequent expenditure. After the initial recognition, subsequent expenditure. So these costs would be classified into two categories. Number one is revenue, number two is capital expenditure. If your AC technician would quote a cost to you that increase the economic life of the asset. For example, initially you have estimated the life of your AC would be equal to 5 years. And for example, your AC technician would ask that if you, for example, incur this particular kind of the cost, so that would increase your asset life, for example, up to 7 years. So if the economic benefit or the life of the asset or the enhancement of the asset increases after the AC technician incurs the particular cost, so that cost would be classified the capital expenditure, and that also will become a part and parcel of the game. That will also become the component of cost. If, for example, if the AC technician incurs the cost that maintains the economic benefit of that particular AC, so that particular cost is revenue expenditure. In short, we call the capital expenditure as capex and revenue expenditure as revex. I'll give you another example just to make this concept very easy. Think of capex as buying a gym membership, a big cost. Big cost today for the benefits over time. You take the benefits over time. So the capex is taking the benefits over time and a big cost incurred today. Revex is like buying snacks on the way to the gym. Those just costs just adding up, but you are not getting any stronger. So the way to on a way to the gym, if you are buying a snack, that's the revex. But if you are, for example, taking a membership on a gym, that's the capex. If you are, for example, let's say what I need to call, I'm just remembering a correct word. For example, if you take the example of a car, and for example, you modify all the engine. So engine is the life of the car, and the engine, the proper modification of the engine definitely increase the value of the asset, the life of the asset, and the economic benefit derived from the car, it would increase. So that's the capex. But if you're, for example, changing the oil filter or the oil or the air filter or the tuning or the service of the car just to maintain the economic benefit, so these are the revex. The capital, the accounting treatment is very important. Accounting treatment is whenever the capex is recognized, whenever the company realizes that the capital expenditure is being incurred, so the double entry would be the asset debit cash credited. And if, for example, you have realized that the economic benefit is being maintained and not being increased, not being enhanced, so that particular expenditure is known as revex, and the double entry would be the expense debit and the cash credited. Now taking a previous example, we are wrapping up this example. If for example, we have acquired a machinery by the amount of 5,19,000, we have recorded this whole machinery by passing the double entry asset debit 5,19,000, cash credit by 5,19,000, and on, for example, after the 10th day, we have incurred the $10,000 cost again, and that $10,000 cost has incurred to increase, for example, the life of the asset, or for example, to increase the enhancement or the increase of the economic benefit of the asset. So I would pass the entry again, asset debit and cash credit by $10,000, and in my books, the total combination of the cost would be 5,29,000 rather than 5,19,000. Continuing the example, if for example after 7 to 8 days or after for example 10 days, there is an incur of the cost again, I call my technician again and I for example incur the cost related to the repair and maintenance, and that cost for example would be amount to, let's suppose, $6,000, and my technician says me that it is being incurred just to maintain the life or just to maintain the economic benefit of an asset. So now I would pass the entry expense debit cash credit by 6,000. I would not increase the asset by $6,000 by passing the entry asset debit cash credit 6,000 and would for example revalue my asset by 5,35,000. No, I would limit my asset up to 5,29,000 and would pass the expense entry by 6,000, and that would increase my expense, lower the profit, and for definitely it will decrease the tax liability. So that's it for the today's session, and we have discussed a lot up till subsequent expenditure. We have discussed the double entry. I would try my level best in the next session to fix my pen so that I could write on the screen and do the double entry and make it easier for you to understand. So let's wait for the next session. See you in the next section. Goodbye.